And welcome to another session of Sunday Setups. Today, accompanied with me, we have by my side Jacob. How you doing, sir?
Doing very well, bro. Happy New Year to all. Happy to be here. Glad to be back.
Happy New Year. And of course, we have the protege, the prodigy, Mr. Pastor Pips. How you doing, sir?
I am doing fantastic. Listen, guys, I'm very thrilled for the new year. I'm looking forward to attack this year. Let's go.
Yes, sir.
Amazing. Let's go. So today, of course, as usual, as ever, we present to you our website, which is, of course, something new this time, Lit Capital 2.0. We are bringing you guys new features, new packages, but more importantly, new levels of education. So be sure to head over to litcapital.co.uk. Make sure you sign up and become a member. Head over to our free course so you can get some good information if you are just entering the world of Forex. Of course, explore the website and have fun at your own leisure. But without no further ado, we're going to take it over to the economical calendar to see what we do have in stored for this week. So, with Monday approaching tomorrow, we are back to work from Monday. But we can see that the markets don't really start to warm up until we move into Wednesday, which is where we start to see some PMI combined with oil inventories, as that is every Wednesday. But more importantly, we see some FOMC meeting minutes, and we also see a speech there from the Governor Bailey, the Bank of England. So Wednesday is really what it looks like to be the day that we can start to expect to see some more liquidity coming into the market. Moving into Thursday, we see CPI at 10 a.m., CPI from the euro, PMI from the pound, and the monetary policy statement will be released at 12:30 on Thursday for the euro. We can expect to probably see some unexpected press conferences with the euro throughout the week, seeing as they are releasing a monetary policy on Thursday. And moving into Friday, as it is the first Friday of every month, we are going to come into the NFP. So we shall see how the markets treat us for the first week of January. I was about to say July then. The first week of January. What I'm going to take you guys through today is gold. As you guys know, my pairs are usually Euro NZD and Euro AUD. But as we are at a standstill at the moment with the markets just, of course, reopening, I'm seeing more of an impact, more of a position, should I say, that we could potentially take on gold and the other pair that I'm going to show you. So just by looking at gold from a monthly perspective, just looking at cryptocurrencies, excuse me, okay, just looking at commodities, not cryptocurrencies. What I was going to say was cryptocurrencies have stole the show over the Christmas period. However, commodities are, of course, always going to be the go-to when the economies are performing poorly. So it does seem like with there being a new strain of COVID, that we probably are going to see a more stronger push with commodities. And for that reason alone, I'm looking at gold here. If I just go down to the daily quickly, we had a pullback into the area, which gave us a 50% retracement. And we also had a candle that we was looking to play out of from our last year's market outlook. Now, however, price has been stalling slowly, pushing up towards our institutional level around the 1900 area, 1905. But with that being said, we want to see if price can return back up into this zone. As mentioned to you guys before, price always has a 70% chance returning to the zone. But I'd like to see price really push past this zone. When you look at price from the monthly perspective, you know, we look at this wick here and we really do need to take into consideration that the commodity sector has more reasons to be stronger than it does to be weaker. And for that reason alone, I really want to see gold push up and break some records. I'd like to see gold push above the 2065 handle. But looking at something really happening within this week, we're looking to see if we can get a reaction out of the 1906 area. And if we can't get a reaction, there is some imbalance right here up to 1930 that we can expect to see price fill before, of course, potentially reversing. There is no real trade set up at the moment, okay? The markets have just reopened. It's really just a case of us right now opening our eyes again and seeing what's available and pretty much waiting to see if price can play out into what we're expecting. Last but not least for me, I'm going to go over AUD JPY. I haven't gone over this pair in a while. The last time I went over this, I told you guys we had a big buy on our hands, and price was really in these discounted areas that gave us a good confirmation for us to go long. With that being said, I'm taking you guys back to the monthly because we are at the beginning of the year, okay? And what I was analyzing throughout the end of 2020 was the Aussie was becoming very strong. You know, the yen was going through a lot of problems, and really and truly, now when we look at the Aussie, we can see that there's a lot more optimism. So from that being said alone, I would like to see, even towards the end of last year, Jacob, I'm sure you'd agree, you know, AUD, USD stocks they were rallying. So the Aussie was really strong. And towards the start of this year, of course, you know, it's early days. We're not going to start to say, yeah, prices are really going to fly. But I would really like to see AUD JPY surpass these highs. So the first area of interest, and it's an area that I'm going to keep you guys up to date with throughout the week in the Discord. First area we want to see price break is 80,692. And the second area would be, if I go over to the line graph, excuse me, the second area I'm looking at is 83.256. So these are areas that I'm waiting for price to close above so that we can get a pullback, so that we can, of course, go long. But with that being said, when I'm looking to get a pullback, I would like price to break 80.329 and then retest an area such as that, an area being 76.75. So I'm going to keep you guys informed and up to date throughout the Discord. It's very important, if you don't have access, to head over to lickcapital.co.uk so you can get access to the Discord, to our charts. We are providing you guys with charts every other day. Every time there is something happening, we're keeping you informed. So make sure you're up to date and you're inside the Discord to stay lit. That's me, over and out. Over to you, Josh.
Thank you, Cavell. All right, so my pair for you guys today will be on pound and ZD. Of course, as Bell said, it is a new month, so we need to have a look at the last month's candle. So right now, first things first, is price is currently within our monthly candle, within our monthly zone, where, you know, we may potentially get prices pushing up higher to take out new highs. So we have seen a small rejection and we are seeing price push up. However, having a look on the daily time frame, I'm starting to slowly see that bullish strength. Okay, even though I can see that on the daily, we are in a sell area at the 1.90500 area. You can see loads of wicks within that area. However, price seems to be slowly pushing up into that area. So simply, all I'm looking for is if we can get a break of structure, if we can get price making a new high above these this high over here, this lower high, to then make a high, then we should expect some bullish strength on pound NZD. My second pair will be on USD JPY. Okay, so having a look at the monthly, you know, similar picture again. Okay, the fact that we are in a monthly zone, we are in a monthly candle area. We have seen a reaction from this area to push up, but then price eventually has trickled all the way back down into this zone. So looking closer at the picture, I am seeing this, you know, retail traders will be looking at this trend line and potentially looking to take some shorts off of this area. But I do believe that we may get price pushing up higher to take out some liquidity above this area. And if I go down to the 4-hour time frame, do have some imbalance sitting within this area here. I'd like to see price push up, potentially fill the imbalance and keep on coming down lower, or take out more liquidity to the upside. And yeah, that's all from me, guys. And I'll hand over to Jacob.
Appreciate you, Josh. Right, guys, welcome back. For you today, I've got two pairs, and I'm going to start off with US oil. So Cavell's actually sent me an article that I need to read regarding some OPEC news, but just in the picture of what we're seeing technically, I still think we have a lot of upside movement. Just going off of what we're seeing on the monthly picture here, it's been very bullish, and that's due to, obviously, with DXY falling and having that recovery from last year when oil went to negative prices. It was only going to be bullish from there in terms of a liquidity sense. There was only room to the upside for it to actually attack. So what I can kind of see here on the monthly picture, as we can see, we had this crazy downturn here. So we could still see a mitigation play happening around the 55 mark. So it is yet to reach there going into the new year. So I do expect price to try and attempt to get up there at some stage. So if we then go back to the weekly picture, we have this imbalance here. We have these last two down up candles, excuse me, which actually triggered this crazy bearish move. So I will expect some type of pullback or mitigation from that area, you know, which is kind of imminent. It's filled a little bit of the imbalance so far. I will go to a smaller picture, but as we can see on the monthly, you know, the last pullbacks were back in October. So we've actually yet to experience any type of downpour since then. So what I can expect is maybe a bounce from this area that we've highlighted on the weekly with the two weekly candles that we had to the upside. I do notice that we have some equal lows here. So what we could potentially do is be a buyer up until this imbalance fill here, which would be a great move. We're talking around 400 pips to the 50 point, maybe to the 51. So I'm personally going to be trying to buy this to the upside because I don't think that it's done giving us that move to the upside before retracing. So what we can kind of see is liquidity pushed up here where we kind of had some of the imbalance filled, and then we've kind of moved up and consolidated. So I think, you know, we could try and attack this high eventually again. So I'm kind of targeting this last down candle here, heading into that zone. So that's one setup for you guys. The other setup I have for you is GBP USD. So I actually wiped my chart, kind of talking to my team about it. Going into a new year, I wanted to just have a fresh outlook on all of my things. So just off of the bat, just going off of the higher time frame again, what we can see with GBP USD, I'm not in favor of the DXY being crazy bullish anytime soon. I do think it is due a pullback though, but long term, I do think DXY is bearish. So heading up, we've seen the pound being pushed up to what we saw with this last up candle, which triggered the move to the downside throughout 2019 and 2020. And we're yet to see that mitigation happen from this area. So what we're going on and seeing on the weekly picture is we have an imbalance here that is yet to be filled, and also two up candles, which kind of brought the market down back in 2018. So again, I would like to be a buyer to this area because there's still a substantial amount of pips. I'm not bearish on this at all, but I'm just thinking these are areas that we could potentially target. So I'm not actually seeing a setup form right this second on this pair, but I do believe it is still a buy. We should still be bullish on this, especially with news coming out with Brexit now being secured. If you haven't, you know, been in tune with the fundamental sides, you know, Britain's not as bad. Obviously, we still got the COVID, but in terms of, you know, getting Brexit over the line, there is some positivity coming up for the future. So I still think with the DXY being where it's at now in regards to such a downturn, and they're yet to, you know, really figure out what's going on with COVID over there, we can see that upside move. So we don't have an existing setup right now, but we are going to be monitoring from tomorrow how this can unfold and where we could potentially get an entry. So a lot of movement to the upside. I will be targeting probably around the 139 mark, like minimum. I'm trying to think it could potentially go there minimally. But that's kind of the only two setups. It's been a while since we've all looked at charts. We had a nice layoff around the Christmas period. You know, we've all, Pavel's mentioned, we've reinvented the website and stuff like that, and the Discord. So for those that are not in the Discord, you know, and you do want access and whatnot, please check out our website. You'll be prompted with a screen which could either allow you to request a phone call back and one of our team can get in touch with you, or you can just slide over to the packages section and have a look at what we have to offer with the subscription to our Discord being on there. Excited for the year ahead. You know, there's going to be a lot of opportunity for us to better ourselves trading wise, and obviously, you know, we're going to try and exploit the markets to make some money, of course. So, you know, very, very exciting times ahead. Looking forward to the future. Please check out our YouTube channel, like and subscribe to that, so we can bring you more content like this. Remember, guys, every day is money day.
Money day.